what we're going to do is talk about trading the old box. So if you've seen the box before, you probably know what this looks like. Essentially, a box is a consolidation, and I'm going to show you 3 ways that you can use this box. If you'd like to get an on-demand training, you can go to nakedtradingclass.com, and I'll share with you how you can grow an account regardless of your trading system, so long as it makes money. So that's at nakedtradingclass.com. So let me share with you what we're going to look at here in terms of the box. All right. So I am going to get into, this chart is the pound yen. And what we're looking at here is the 6-hour chart. And so a box is, as you probably know, a box is essentially one of these spots on the chart where it doesn't really go up, doesn't really go down, it just kind of goes sideways, so to speak. And for me, the key to finding a box is to get a nice floor where the candles are touching the bottom of the box and then the ceiling. It's okay if the market extends beyond it and gets a bit wicky at the floor or the ceiling or both. The key is you really need to know kind of where your candles are constricted. So the first way to trade a box would be to just trade the box itself. This is probably the most difficult way as well. So let's see if we can find one here. If you, and one of my rules with the box is if the market is printing candles that go from one end of the box to the other, then that means that the box is not drawn well. So we want it to take several candles to go from one side to the other. That's pretty important. So we got the old box right here. Now this box is interesting because it has a couple of fake outs, or probably just one fake out right here. We'll talk about this in a minute. We'll come back to that. But for right now, I just want to make sure that you understand why I've drawn this box the way I have. I got a floor down here. Now I could have decided that I'm not going to include this section over here, and I could have drawn a box something like this over here. That would have been okay too. But the way that I would trade a box like this, if you wanted to trade from one edge to the other, is number one, I'd like to see if there's any reason to have a bias to go long or short. So for example, I might look at the open position ratios and say, you know what? Most of the traders here are actually buying the pound yen, so I'll just wait for the market to get up to the edge of the box here and print a wicky candle and sell off of that. I think it would have been easier to trade this box over here because, in other words, to look at the box like this, because it would have meant I would have already established the box. I need at least a couple of touches on the bottom and the top. So I've got like, one here, one down there, 2 down the bottom, and then two at the top. So at this stage, from here onward, I'd say, okay, I've got a box. And so I could have a buy order down here or even a standing sell order up here. I think this is probably the best opportunity for a sell here, where this wicky candle print, it's not really a kangaroo tail, but it's a wicky candle. If the market didn't decide to cut, or if I didn't have the bottom of the box right here, then I would only achieve my target if it went all the way down there. This is a tricky way to trade because it will often bounce around quite a bit, going from one edge of the box to the other. So it's a little bit nerve-wracking. For sure. It's not a lot of fun for a lot of traders. And it's definitely not one of those things where you'd want to use like a break-even rule where you move to break-even after the market goes so far. Typically, you wouldn't do that with this strategy just because it's just so likely that it's going to bounce around a bit. I mean, by definition, if you've got a box like this, the market doesn't really have a strong direction in any side. But if I did have an open position ratio imbalance and I had like say 70 or even 65% of the market on one side, I would definitely only trade the other side. Okay? So there you have it. So that is the box. Okay. Now, let's talk about another one. This one's pretty cool. Actually, let's see if we can get, actually there's some examples here. The second way to trade the box, instead of trading inside the box, you can trade the break of the box. And this is classic trend trading. When you see a market that's strongly trending, and then you see the market consolidate like this is the way to go. It's really fun trading the breakout. So you wait for the bullish candle to get out of the box. So let me actually advance to the end of this chart here, or wherever we were at. I'm just gonna go all the way to where this is Forex Tester. Okay, so here's another box right here. This one's not that exciting. You might trade the edges of the box, but I would not call this a trendy box. The market's moved up, so maybe it'll move up. If it moves up and makes another strong move up, then maybe I would say we're in a trend, but right now I'd say it's too early to say. So I'm just gonna hit the space bar here and see what happens. Nothing. Okay. Well, maybe we're going down now. Maybe we've got a bit of a downtrend. That would be interesting. So here's a box right here. Here you have one. Look at this. There's a box, and again, you're waiting for the big candle to re-engage the trend, and then I would just sell below that candle. So you'd be in here, you'd have to withstand this pullback, and then you'd be down again. So let's see if we get another box. No, it's just trending. Okay, now this is an interesting pattern here because this is usually, not always, but this can mean that the market's, it didn't make a lower low here, and then it made a really strong bullish candle. So okay, so here's potentially another box right here. This looks like an uptrend. The big candles are the up candles, the little candles are the down candles. So you might watch this box here, and boom, there you go. So you put a buy stop right here above the high. Stop loss goes down below the low, and that's how I would trade this box breakout. And I'm in, and the market's going. Wow, it's going even more. Potentially could have had one here, but that would have been a pretty quick little box. It's okay with the trendy boxes if the candles go from one edge of the box to the other. They tend to be smaller than the normal consolidation boxes. So I'll move my stop loss to break even here and see if we can get another one. Here's another box, or nearly another box here. Let's see what this does. So here you go. Boom, right here. What happens? Nothing. Back in the box. We're going to break out of the box? No. Okay, so at this stage, probably a good idea to dump this trade. It's coming back. That was about a 1-to-1 trade. It wasn't really that good. All right, so let's talk about another box that you might want to trade. This is what I call the last kiss, and I wrote about it in the Naked Forex book. It's a pretty fun trade. For a lot of traders who like to take smaller losses, it's excellent. So here's a potential box right here. We've got the up and the down. We've got the top and the bottom of that box. Let's see what happens here. Yep, we hit the top of the box. Okay, we've totally broken out of this box. Now, if the market comes back up here and touches it and prints a bearish candle up there, that would be a last kiss. I'm not sure that it will, but that's what it would look like. Yeah, no, it's already taken off again. So again, what I would do here is I'd probably wait for another big fat old box and wait for the breakout. So the way that it works is you trade the box, you trade the breakout of the box, and then if the market breaks out, it has to come back and retouch it. And if it closes inside the box, then the trade's over. Wow, this is a crazy trend right here. This is the pound yen 6-hour chart, 2016 is where we're at. All right, so let's see if we can get one right here. So this looks like a bit like a box. We could really use another touch. Well, we got a couple touches in the top, couple touches down the bottom. Looks all right. Okay, we've broken out of the box. Even though this has been a pretty long consolidation, it's potentially a with the trend type of thing. Okay, we're back onto the box. Ooh, nice little kangaroo tail. So this is what it would look like. So I would put my emergency stop in the middle of the box, which should be right about here at 144.04. I put my buy stop above this little kangaroo tail looking thing on the box. And if it closes back inside the box, it's trade over, right? All right, so I'm in. Sweet. All right, this is looking good. I would probably actually even move my stop loss to break even at this stage. And probably trail. I could use like a 3-bar exit below this candle. And I'm going to get stopped out. Yep, there it is. So that was a small winner. But if after this signal candle, right here, the market had fallen back inside the box and closed below the top edge of the box, then this would have been trade over. So there you have it. There's 3 different ways that you can trade boxes. The directionless box, where you trade from one edge to the other. You could have a bias there, but you don't have to. And then there's the trendy box, and then there's the last kiss box, which is not necessarily trendy. I hope that this helps. I wish you happy trading. If you want to learn more, go to nakedtradingclass.com. And you will get, you'll actually see something that looks like this. And this is the course, the on-demand course that will show you 3 ways to grow your account quickly. So I hope it helps, and we'll see you in another video. Take care. Bye.